Welcome to the Limit Up Weekly Capital Market Podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years plus, a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. Here today with Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Ian, welcome along again today.
Thanks, Phil.
For the last week, there are a few things that happened. The Bank of England released their rates as well as the traditional Melbourne Cup RBA announcement. Today we're going to talk about some liquidity issues that are occurring and credit, the CRE liquidations in the US, and speaking of the US government shut down as well, with the Fed in disarray as they're data dependent and they don't have a lot to guide them. The things we'll go through further will be about gold and silver, USD and yen, the S&P 500 and the Dixie. Ian, over to you.
Thanks, Don. Yeah, so the Bank of England held rates, no surprise there. And so did the RBA in the light of a lot of inflation suddenly appearing from nowhere. The Bank of England has a more forward-looking policy, admittedly as of late, and they have actually managed market expectations very nicely in the last few months. I mean, I can't remember ever saying that. I used to take the Bank of England's line at Bank of Nova Scotia in days where they wore top hats. In juxtaposition to the RBA, who are looking through the rear window, got no idea what's coming up. So, bit of difference there. Last week's liquidity crunch, i.e. banks having to borrow at higher rates between each other, that turned out to be a non-event, as we discussed. There are other liquidity issues, which we'll talk about in a minute. There's lots of credit issues with those invoicing type lenders for auto loans, car parts, that sort of thing. Lots of delinquencies still, yet more. And commercial real estate things, lots of actual money changing hands very cheaply. Massive buildings, billion-dollar buildings.
I mean, there'd be a certain sort of dollar figure that you'd be tracking on those sorts of loans. So we're not talking the smaller end of the market, you're talking larger infrastructure.
Well, I mean, they're like, a really fancy tower in New York, for example, that goes for 10 cents in the dollar and is a write-off of almost $1 billion for someone, which is the banks who now own it. They've got to do something with it. And all that ends up to is more credit because banks don't want to lend when they've got distressed books.
No, exactly right.
Otherwise, the Fed is in disarray, as Comrade Powell is the only one that wants to hold rates now. All the other FOMC members want to cut rates. Citing bank reserves as a big issue why they are cutting rates and adding liquidity. I think that's a bit of a fudge because bank reserves are for insurance policies for banks with money held at the Fed. Less reserves equals less lending. As we just discussed, banks not keen on lending at the moment.
Exactly.
But anyway, it all ends up to this big expectation of quantitative easing, lots of free money. Trump earlier today, I don't know whether you saw it, talking about $2,000 handout for every American.
The tariff dividend, I think.
The tariff dividend, that's right. Who knows? And then almost minutes later, Treasury Secretary Besant was walking it back a bit.
But
anyway, the market is convinced there's this massive wave of free money coming, and they're probably right.
And how is the Fed managing without the data? Sounds like they're a bit blind on monetary policy.
President Trump's pushing them off a cliff.
The
only way is down in rates, and you might as well do it now. And actually, I think the Fed is going to use government shutdown as an excuse. We had to do it because we didn't have any data.
Yes, exactly right. Interesting.
See where we go. Should we have a look at the charts?
Yes, please.
Alrighty, share the screen. So, this is Bitcoin. I've been fairly negative on Bitcoin for quite a bit. It's had a good week in that it's tried to push and close below that $100,000 level. 1, 2, 3, 4, you could call it 6 times if you like. We've had a big bounce off today. in reality, it's not actually going anywhere at the moment.
Yes.
And despite all this talk of quantitative easing, free money, cheap loans, it's still going, but it is still above 100k.
Yes.
So fair dues. I'm pretty neutral on it, to be honest. At the
Okay.
moment. I can't see there's a trend there at the moment.
Right.
If it gets back above 126 again, maybe there is a trend. Maybe that's the end of a long trend.
Well, I was curious, do you think, which way is that trend? Is it just kind of bounce between two values, or is it a potential slide down?
Well, a slide down is probably more likely, I would say, at the moment. Down to, if you can see it down to 75,000 or something, lots of people will be buying it down there.
Yes.
If it goes to 150,000, lots of people will be selling it there. Exactly. And that's a 50% range, though, of course.
Sure.
But it is Bitcoin, but I don't think there's any particular momentum there at the moment.
Okay.
It's a trader's game. It goes up and down, goes up and down, goes up and down. There's no particular trend to follow, I don't think.
No. Okay. Next chart.
Unlike gold, which has picked up nicely, 4070. And I was a bit worried we were going to not manage to maintain it in this trend channel here that we have. So, yes. But we have broken 4040-ish, 4045 here, and yes. Gone higher. So we need to see where that closes. And certainly there's going to be a lot of resistance. These lines that it has adhered to in the past become resistance as it goes up. Yep. But it's looking nice-ish.
Okay.
Silver is a little bit better and cleaner and a lot nearer the top. Just get that one up. So here we're clearly back in the channel.
Yes.
This is all-time high of 55, 54 and a half. Prior to this point, maybe this point, the all-time high had been $50 twice.
Right.
So we got up there, got rejected.
Yes.
And we're coming back for another go.
Yes.
Silver market is tight because the last 5 years, I think it is, the amount of silver produced, i.e. mined, yes. has been less than the amount consumed even by industry.
Yes.
So the longer this runs, the bigger the problem is. And the fact that these metals are held down by paper trades means that at some stage the unwinding is going to be a huge, huge spike.
Yep.
So that's looking pretty bullish, I would say.
Yep. And there's a comment there about gold and silver looking similar. Is that normal for that to occur, for them to have that similar trend in that graph?
Pretty much. There is a well-defined gold to silver ratio, a band really. So let's say 30 to 80 or something like that, the numerical divisor. And it might go to 100 and it might go to 15 in extremes. Yeah. But pretty much defined like that. And I think it was Sir Isaac Newton that defined it as 85, I think it was, many hundreds of years ago.
Right, yes.
As it created a currency out of gold.
Yes, yes. Okay.
But it does go like that, and gold goes first higher, and then silver follows it, and the silver goes completely nuts and then collapses. Is the history of it.
Okay.
And so we're hoping to see that sort of price action again.
Okay. Very good. Next chart.
Yep. So I'm going to show you this one. So this is dollar yen, but first we're going to just switch back to the Dixie. So it's a futures contract, so the dollar against mainly the euro, to some extent the yen, pound. It's a basket of currencies. Mm-hmm. So we've had a really good trend up, but it's up the stairs and down the elevator.
Yes.
And we're coming back down to support again. And I've been talking with our viewers about, is this a new trend, dollar higher? And I think we talked about this last week. It's not convincing.
Right.
I said, if we can get above this line here, which is 99.80, let's call it 100 exactly, then we probably have a chance of it being a trend. We can go a lot higher. This is the 200-day moving average, which is a kind of mean reversion tool, i.e. the price can get away from it, but has to come back to it by definition. And that is pretty much where it is. So everything is sort of coinciding, appearing in the same conversation at the moment. Lots of things about to happen at the price. Okay. But the price action hasn't convinced me that it's going up. Whereas dollar yen, we've got this beautifully from down here. Yep. hit the top, broke higher, went down, came back up again, broke up, and now it has bounced at this double support. And there you can see it pushing off again above 154.5. It goes a lot higher. We have had comments from the Ministry of Finance that they're concerned about the level of the yen.
Yes.
Maybe that pushed it down here.
Sure.
But market normally will shove it in their face anyway.
Yep.
To make them prove that they mean what they say.
Yep.
And so yeah, so that's a good trend we're staying with. Dollar Canada's been pretty good as well, in that it's a bit messier, as you can see. We just mind what I did then. But you can see there's a solid trend high.
Yes.
Starting in June. And you have a very weak Canadian economy. And you have Trump trying to make it the 51st state.
Yes.
And you have lots of land and housing issues in British Columbia.
Right.
Have you seen that?
Not at this stage.
So from some of the laws that go back to the Commonwealth and whatever, Aboriginal or native individuals
Yes.
have managed to overturn the property owning laws.
Okay.
So that houses are being effectively repossessed at zero.
Right.
From people who thought they bought it.
Thought they had right title,
Yeah.
etc.
And when you look at that type of legislation, you see that it's quite relevant to quite a lot of Canada and potentially Australia.
Very much so.
Yeah. So Canada is in a bad place and it's reflecting in its currency. What should we have a look at next? Yields. So US 10-year yields have broken out and had a bull flag here, which is where the price has to consolidate to get some more momentum.
Right.
And as you can see on today, probably not so relevant because it's Asian and Australian time, but you can see it's clearly higher.
Yes.
But the trend is broken. And that is the bottom of a very big, most important trend, probably the most important trend that there is. I've just gone on to another chart there. This is the 30-year.
Right.
Discovered a keyboard shortcut there.
Okay.
Yeah, so rates are still going up, and you can see across here, they're all up, right?
Yep.
China, which is kind of a different thing, it doesn't matter. Aussie 2-year is more technical. So the backdrop, despite what people say, is still rates, market rates going up. Stock market, well, you know, toss a coin on this one, but this is the S&P 500. Plenty of people, well-known pundits, saying there's going to be a stock market crash because no more money going into AI. At the moment that Sam Altman, who is the CEO of OpenAI, says, or he got his CFO actually to say that we're looking for government sponsorship of our data centre.
Yes.
So then the market just went, whoa!
That's not a good sign if you're looking for
Run out of cash.
Yes.
Right? So that spurred a big drawdown, from which it's come up, and you can see from Friday, had a big drawdown and ended at the high of the day.
Yes.
What are we really doing here? We're actually consolidating. Yeah. So if we flatten it out, we can go, okay, well, there's this massive move since Trump got in.
Yep.
And it's kind of messing about. So we actually squared up our long position.
Yep.
It's the only trend we've actually squared up on so far.
Okay.
And we did that on Friday. Simply because it could crack. We've had a good run. It's not a big conviction to stay long at the highest level in recorded history.
Okay.
And we've been saying we've been very small long, like 4 months.
Right. Okay.
If we look at a bit of a long-term chart of gold, just to show you that no matter what it's doing now, it's still in a solid trend.
Yes.
And you can look at silver. It's the same thing.
Yep.
If you look at, what should we look at, Bitcoin, it's definitely not the same thing.
No.
In fact, it looks quite negative. And if you look at stock market, Where are we? Yeah, okay, well, it is still in the trend,
Yes.
but not as convincing.
No. Not in comparison.
No, I would have said so.
No.
And anyway, at some stage, we've got to take the money off the table, so we did. So that's all for this week.
Interesting information.
Okay.
What's coming up in this week then?
Pretty much no central banks. US CPI is meant to be out on Thursday, I think it is.
Right.
If you remember last time,
Yep.
it came in amazingly perfect for the administration, as
Yes.
if they had access to the numbers that can fudge them.
Yes.
Market just took it as a load of rubbish.
Yes.
But it might be entertaining. But
Is it already built in, given some of the other signs that you've already discussed?
it's not built in because the market doesn't believe in the non-farm payroll and employment numbers, because they were clearly being juggled with.
Right.
So the market's going to completely ignore it.
Okay. Well, we look forward to those numbers coming out.
Yeah.
Anything else needed to add before we wrap up?
Only market focus is on liquidity. Some people talking, could there be an emergency Fed cut? I think there's zero chance of that.
Right.
But you know what markets are like, they get hold of these things and they run with it.
Yes.
Can be, what's the phrase, the market can be irrational longer than you can be solvent. And yeah, so it's looking for that QE and
Yes.
what's going to happen with that credit stuff. And it's going to be pretty interesting, actually, to see what happens, especially to Bitcoin, which should be going a lot higher. But is
Excellent. Well, thanks again, and thank you for those listeners who were who tuned in today. Very insightful once again, and look forward to everyone tuning in next week to the Capital Markets Podcast.
Thanks, Philip.
Thank you.